Hey there folks, Greg Shepard here, S&A Financial Services. In today's video, we are excitingly talking about guaranteed period options when you initiate that fixed income, that lifetime fixed income, from the TIAA Traditional, okay? Hang tight, this is a good one. I say that sarcastically, right? Okay, but it's I tell you what, it's gonna impact a lot of you out there, so stay tuned. Some good pieces of information here. For those of you that don't know me, again, name is Greg Shepard. I specialize and helping folks all over the country just make sense of these TIAA accounts. This video is no exception, okay? So a lot of you have reached out to me and just turned around a little bit, okay, on some of the lingo verbiage associated with the guaranteed period option specifically. I don't want to get into the weeds too much about all the nuances with the annuity options. I do have an example here I'll maybe share here in just a second, but let me verbally define what we're talking about here. Okay, so let's make it real simple, right? Anything more complex, I'll probably do different videos if I find myself trailing off a little bit, going off on tangents. By the way, questions over this topic or any other topics in my videos, by all means, my information better be below. Reach out to me, I'll get you squared away. So single life annuity option where we tack on a guaranteed period option, okay? Very simple. We have single life, single, one person. It's not two people, it's one. I can't say this enough. A lot of you have reached out and said, well, that single life annuity option where I tack on my wife as a beneficiary and put somebody else as a guaranteed period option. No, single life annuity option, single life, okay? And then we tack on, let's say, a 10-year guaranteed period option. Okay, we could be the wife, it could be I say wife, spouse. Okay, so a single life annuity option, maybe a spouse as a guaranteed period. A 10-year guaranteed period. Okay, so if you, being the main participant, if you die in 8 years, spouse in this scenario gets payments for 2 years. If you, being the main participant, die 11 years after you initiate lifetime income and you have a 10-year guaranteed period option, guess what your beneficiary gets? Nothing, because the guaranteed period option was 10 years. It's that simple. Don't make it more complicated than that, okay? Now there's some, depending upon who the beneficiary is and the age, it can get a little complicated, but I'm not getting to that topic right now, okay? All right, so the joint life annuity option, okay, we're going to pick. Now, just keep it simple, okay? Let's say we have a spouse, we got a married couple, male, since I'm male, so I have my wife as my beneficiary, my spouse, and I'm going to tack on a 10-year guaranteed period. What I'm doing really is covering my spouse first and foremost. Okay, it's a joint life, two. Okay, there's reasons I emphasize this. A lot of you get tricked up. Two people, joint life. Okay, so we're going to cover me and my wife, depending upon how much I leave my wife. 50%, 100% for the remaining of her life too. Now, if we tack on 10 years to cover little Jimmy, okay? Me and my wife live 12 years. Now, we had a 10-year guaranteed period option. Guess what little Jimmy gets? Nothing. If me and my wife, God forbid, are in some sort of accident and we pass prior to that 10-year period, say 8 years, little Jimmy gets payments for 2 years, and that's it. That's it. Okay, so hopefully we understand that. Again, it can get a little complicated depending upon your life situation and maybe the difference in ages, okay? But on the face of it, that's it, folks, okay? It is explained, and let me give you the difference. So some folks are asking about single life annuity option, 20-year guarantee period versus joint survivor benefit option, 0-year guarantee period. So what we're trying to accomplish is tacking on again, keep it simple here, folks, tacking on your spouse for a single life 20-year guarantee period where I'm covered, okay, as a participant. My wife's covered for 20 years, okay, versus joint life survivor benefit option, joint life 100% paid to wife, 0-year guarantee period. So the difference between those two, let me stare at my screen, forgive me, is I have a scenario where we're doing this, okay? Now she's thrown in quite a bit, but it's going to pay her, female's main participant. So that makes a difference, okay? These are actuarial formulas, but single life annuity option, 0-year guarantee period. Single life annuity option, let's go to 20-year guarantee period, $45,780. So it's going to pay her, obviously on her life, and spouse, male, for 20 years. Okay, there's reasons they're doing this. There's a little bit of age difference. Now, joint life annuity, okay? So we got her husband covered life. I think we did 100% payout to the one that's surviving, okay, the male. 0-year guarantee period, $44,869. So what is that? $1,900, less than $1,000 a year in difference. Okay, which one would I pick? I don't know. I think they're going to do a single life annuity option, 20-year guarantee period for various reasons not explained here. You know, a lot of times, is that $1,000 worth it in case you live past 20 years? Choosing that single life annuity option with 20-year guarantee period probably makes sense to do the joint life. Okay, in most cases. Now, the joint life, obviously your payments less. In this case, the payout rate drops down. Gosh, 20 basis points. Okay, not much, right? So there's some things to consider, some things to decide, some things to understand. But really, guaranteed period options, what I wanted to hit home with this video here. Okay, it's not as complicated as you may think. Remember, folks, single life annuity option. There's a key word in there: single. 1, joint life. 2. And for those of you that don't know what I'm talking about, there's others that this is hitting home for. Okay. So, like I said, contact me if you have questions of your situation. I'd love to help you out, see if I can get you squared away. That's it for today, folks. Greg Shepard here, S&A Financial Services. Hey, go on and have a good one. You all take care. All right, bye-bye.